market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Well, this morning we woke up, the market was red across the board. Why? Because we were told overnight there's a lot of uncertainty about the banks, especially the regional banks. Credit uncertainty that also flows over to Europe. But remember what they said to us yesterday, though. Just yesterday, the jibber-jabbers are telling us, no problem with credit, it remains solid.
So the story out of the banking industry is that credit continues to remain very solid.
And so this morning, the market is down about 300 points pre-market before the opening. It's just the opposite of what these people say. Just stop listening to these jibber-jabbers on these financial shows on CNBC and the rest of them, Fox. You just won't get the truth out of them. The truth is, right now, that this is just one of the many uncertainties out there. And again, we'll go over those, but what proves that there's all these uncertainties and there's concerns is gold keeps going up. And it's going up faster now than it has in the last 2 weeks. It means that concerns are real because of all the uncertainty. I mean, not just the deficits, not just the national debt. The labor market's a big one. That's a huge one. And they're playing down the labor market. And they're playing down the tariffs as well. Washington. It's unbelievable. So again, going back to the bank credit, we got $500 billion in undisclosed bank losses. They're not disclosing them. The regional banks, if you want to follow the regional banks like we do, the symbol is KRE. KRE. You keep an eye on your regional banks in the next few months. So, and it may be an opportunity to do some shorting, but don't chase the shorts right now on KRE. I'd wait until it makes a new low, take out today's low. But regardless, so the regional bank, KRE, that's the ETF, that's the one you want to follow. We had a big drop in those regional banks. There's problems, but we're being told, no, there's no credit problems. That's just not the truth. Now, the regional banks, approximately 44% of their loans are bad, substantially bad, as opposed to the five largest banks at 13%. But that's even high for these large banks. Now, consumer debt is reaching an all-time high of $17.7 trillion, $18 trillion. And Washington just, no big deal. Jamie Dimon warned there are more, quote, cockroaches in the credit market. So isn't it interesting? He's telling us about there's more cockroaches in the credit market, but CNBC is telling us, no, that was Fox Business. No, CNBC. CNBC is telling, everything was fine yesterday with the credit market. See, the one thing you got to understand about the stock market, these programs, these TV programs, are all about pushing a positive narrative. I told you about this the other day. these companies, these big cable companies, they need advertisers. And as I said yesterday, the biggest advertising revenue for Fox, CNBC, and MSNBC are the automakers. And so you've got to keep these automakers happy in order to get their funding. So that's where there's always been a problem with these financial shows. Their job is to get on TV, make you feel happy, get the consumer happy, so the consumer goes out and buys these cars or whatever commercials. So they're not ever going to tell you the truth. So that's why it's more and more important that you follow the gold market, and you follow the bond market, and you always know that going forward, which direction the stock market's going in and what direction the economy's going in. You'll never be sitting there, gee, I wonder what the market's going to do. You'll never be sitting there, I wonder how the economy's going to turn out. You'll always know, because the market's forward-looking, and so is it when gold goes up, it tells you there's a problem, it's a red flag, and when yields go down, it's forward-looking, telling you there's a problem going forward. And we have some big problems and some uncertainties, and the biggest uncertainty right now is credit. We need good credit, but we don't. So the regional banks are in deep trouble with 44% of their total loans are bad. The big banks are hiding about $500 billion. They haven't disclosed those loans, but it's legal. They don't have to disclose their bad loans unless they have to sell them. And the consumer loan, including credit card, auto loans, are experiencing historic delinquencies, even worse than before the 2008 financial crash. I mean, that's huge. So these are the uncertainties that keep moving up your goal, that will keep moving up your goal. And that's why, again, gold is rallying and yields are falling. Both good indicators. Now, besides the debt and deficits, increased inflation, the weak dollar, the labor market. Now, the labor market's a real concern. It's much worse than they're telling us, much worse. The labor market has been flipped on its head. But you wouldn't know it the way they talk. Now, did you know that foreign-born illegals, illegal labor, foreign-born illegal labor, accounts for half of the U.S. workforce? Did you know that? I didn't know that. I mean, that's huge. That's a real problem, isn't it? So when you have in the last, let's see, I want to sure I get this right, since March, 2 million foreign-born illegals have been deported. Now, these people aren't rapists and murderers. They came across, they were invited across by the most of them, by, of course, the Biden administration. And they're just trying to make a living, and their family. Now, these aren't rapists, they're murderers. They just want to make a living. They want to live in the United States. Nothing wrong with that. But they broke the law. And what is happening now is that the other side, they want to give these people everything, take care of them, give them free, give them lawyers free, give them insurance, everything else. But the point is, there's such uncertainty that this is going to keep. That is also why gold is going up and the bond market yields are going down. Now, here's the problem for the companies. So you've been paying foreign-born illegals, these companies, $10 an hour, maybe 15 the most. Now, how are you going to replace the 2 million labor, the 2 million people that you had to get rid of? You've got to find 2 million more illegals to come in, so you're only paying that same $10 or $15. That's going to be pretty hard to do. When you got to start paying $30, $25, it's going to crush earnings I mean, half of our labor force are illegals. So when you have to replace them with illegal, you're going to have to pay the full boat. That's going to really hurt the stock market because, again, earnings are going to get crushed. So that's another big uncertainty. So that's why yields keep going down and gold keeps going up. People just keep saying, well, how long can gold keep going up? Well, as long as we have this kind of crap going on. And here's what really gets me. This all could have been solved years ago. It's all been avoidable. But since 1954, for 71 years, the Democrats have controlled both the House and Senate out of 71 years, all of those 71 years except for 4 of the 71. How the hell could they not get an immigration plan put in place that would make sense when they're controlling, since 1954, the 71 years, all but 4 of the 71. How could they not do that? And how could the Republicans not put tremendous pressure on during this time to get them to solve it? Because they both wanted illegals. Because they both get campaign contributions from the large corporations. But now that's all coming down the pike. But the point of this is that I'm trying to point out, when people say, well, what's gold going to do? Oh, it's going to keep going up because we have these kind of uncertainties. Tariffs, that's another big uncertainty. They just poo-poo it. Oh, no big deal, these tariffs. Oh, we never worried. They don't do anything. Oh, really? Sure they do. Are you kidding? Tariffs are a huge uncertainty. Are you kidding? That's a hell of a headwind for small businesses. You know, not every business is Apple or NVIDIA. What drives this nation is small businesses that have, 10 or less employees. And the big uncertainty for these businesses, and by the way, it's the small businesses that drive the good, solid, full-time paying jobs. The small business. And they're getting screwed. And when you have an average, think about it, since 1934, an average, okay, there's been really no tariffs since 1934. Now the tariffs that are in are an average of 18%. They're saying, oh, that's nothing. That's huge. That's huge for a small business. In one quarter, small businesses had to pay 1.5 trillion imports from Mexico and China and Canada. That's huge. So when someone tells you, oh, no big deal, tariffs 18%.
3 minutes.
For Ford, 18% is nothing. GM, nothing. 20% would be nothing for them. 30% would be nothing for them. But for a small business that has 3, 4 employees, 10 employees, that's huge. So that's another reason why gold goes up and your treasury yields are going down. There's just so many uncertainties that's going on in our economy. And again, as we hear how the economy's doing terrific, everybody's getting rich, it's wonderful. No, I told you yesterday, the only people getting wealthy are the top 10% and the 1% of the 10%, and everybody else, they're dying. They're dying. So gold, again, is just focus on your gold and you'll be just fine. Now, when I say focus on gold, we've been buying, again, GDX. That's the miners for a long time now. We have terrific profits. And I told my gang members, starting the beginning of the year, I said, I'm going to promise you one thing. We're going to make all our money in gold mining. And we have. Talking about commodities, oil. Have you noticed that oil, that's another big problem, another uncertainty that's going to keep gold going up. Oil has always been priced in dollars. I mean, as far as I can remember, I was in the oil industry for 25 years. A 1% appreciation of the US dollar always reduces the price of oil by 3%. Now, what we're seeing today, because of all of these different tariffs and sanctions, and a lot of countries are moving away from our dollar. So about 20%, now it's not a big problem right now, but unless Washington stays on top of it, and they never stayed on top of the labor problem, the illegal problem, did they? We wouldn't have this mess if they did. But think about this. 20% of the world's oil has moved away from the dollar. 10%, half of it, is Russia. Now, the shift away from the dollar for oil is a big boom to countries like India and China and Brazil and Thailand and Indonesia, that whole area over there. Big boom. So they can buy oil now at a huge discount by paying in their own currency. Now, it's not a big problem right now because 55% of the world's reserves, oil reserves, are still in dollars.
10, 9,
But
8,
the illegals weren't a problem either, were they? Then all of a sudden it became a big problem. But Washington doesn't work like that. They don't think going forward. We'll be right back with a lot more uncertainty. That's today. That's today. That's what
Want
we're
more
going to talk
information
about.
on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Okay, welcome back. So we're talking about why is gold going up and why yields are going down in a 10-year treasury. Because the one thing you can depend on is gold and the yields and treasuries telling the truth, looking forward if the market's in trouble, if the economy's in trouble. Now let's go to gold. Gold is going up like crazy. It was no coincidence. Think about this. The recent spike we had in gold came at the same time the labor market news hit and told us the labor market was worsening. So gold rallied at that same time, exact same time. when employers added 128,000 new jobs over 3 months, and then the following 3 months, they only added 35,000, gold rallied. So gold is a wonderful thing. It tells you exactly what's going on. And these uncertainties with these tariffs, as I told you a moment ago, gold's going to go up until they really settle what these tariffs are going to be. They're still ahead of it. Look how last week the market dropped 800 points in about 2 minutes when there was going to be a tariff war with China. That's the uncertainty I'm talking about. So what do? You're going to go and you're going to jump in and add more money to your 401k? Are you nuts? Or are you going to go in and buy Coca-Cola, defensive stocks, Clorox? Are you nuts? No. So gold is a great hedge against what's going on, uncertainty, bad times that are coming. And if I only could convince you to learn how to sell shorts, because when gold does drop, and when the AI bubble, that's the biggest uncertainty, is this AI bubble. That's another reason why gold's going up and yields are going down. That's a huge uncertainty. Because I sound like a broken record, but we don't see what's going on. When you peel back that curtain, what's really going on is the biggest money, the smart money. They're dumping the top stocks. So in other words, when you look at what's really going on, and I'm going to show you right now. When you look at, let me get them up here for you. Sorry about this, but it's amazing. All right, I'll go over a couple of these stocks with you. It's crazy. Okay. When you look at the AI industry, okay, the AI industry, the big thing about the AI industry where all the money goes, most of the money goes, is in the semis, okay? If you look, for example, at SMH, that's the ETF, you see it's still going up, still doing well. And last Friday when the market dropped big, I told my members, don't get out because there's no crossover. That means on my color-coded chart, I designed my own color-coded charts 25 years ago. And what they helped me, because all I want to know is pricing. Is my price going to go up or is my price going to go down? And how you figure that out is I wanted to have a chart that followed the money flow. If money's going in, I know my pricing's going up. If money's coming out, my pricing's going down. And sure enough, if you looked at last week when the banks, or not even, let's just take the semiconductors, SMH. If you have your own computer up right now, you can take a look at SMH. And you can see when on October 10th, that Friday, that big drop, your computer, your chart, you had a big red candlestick going down, boom. My chart stayed green. What's the difference? Because when I designed my chart 1998, going way back, I wanted the money. I want to know, where's the money going? I don't care about the opening high. The closing high, we keep it green. The closing low, if it's the low, we keep it red. I don't care. I want to know about my pricing. So you can see right on this chart, SMH went down, big candlestick, big drop. But on my chart, it stayed green, telling my members, don't get out of your semis. And guess what? It's right back to where it was when it started on October 10th. So my members didn't get out. So again, going back, I don't want to get off track here, but if you go back and take a look at this whole industry, this AI industry, you have, again, the chip providers, you have the cloud providers, and then you have, and there's really only 3 real big chip providers, and there's only 3 big cloud providers, and then there's 3 little ones, but there's also the infrastructure support for the chip providers like Broadcom, Micron Technology. They do all the service, they do all the infrastructure support for the chip providers. In fact, yesterday, I think it was yesterday, the other day, those stocks, all of a sudden, we started to see that the yields started to rally. And the yields on the T-bill started to rally. So we knew right away that, and that was the same time the S&P was making new high. So we knew that all of a sudden those stocks were going to start pulling back, and that would pull back the S&P. So my people didn't get hurt. Now you have what we call FOMOs, these people that they're crazy. They always buy because they're fearful of missing out. And as everybody's going, look at this, the S&P, another new high, 47 new highs already. Get in, right? The minute they got in, what happened? Boom. But my people, they get hurt because they had support of my chart. And believe me, I'm not trying to promote. Yes, I am trying to promote. Of course, I'm not going to BS you. 225,000 people use this chart. Because isn't it nice when it dropped when the semiconductor SMH dropped from a high of 346.49 to a low of 324, it told us not to get out. Go look at your chart. That same day, I bet it's red. Go look at it. Look at SMH. I'm telling you, if you go look on October 10th, you got a big red candlestick going down. So you panic and got out. Then all of a sudden now the stock goes right back out. Oh, why'd they get out? Well, that won't happen to you if you're following the money. And that's why I designed these charts in 1998, because it was frustrating for me. I said, why the hell can't somebody design a chart that follows the pricing of my stock? I don't care about it made a new low. I can figure that out on my own. It closed on a low that night, closed on a high that night. Closed on a high, will turn it green. Closed on a low, will turn it red. Who the hell cares? So now the other thing that was going on with all these bank stocks, remember last week with all the bank stocks? Same thing. Bank stocks were hot. Oh, they were hot. Every bank stock, right? And the same thing happened. When you go and look at all the bank stocks, boy, I'll never forget, when the earnings came out, they always come out, these earnings, and boy, do they parade these stocks. So JP Morgan, or let me give you a better one, and you can follow me on your chart, you'll see what I'm talking about. Take, for example, Citigroup. So Citigroup, when their earnings came out, if you're looking at your chart on October 14th, you see how the big candlestick went up when they came out with earnings. Yours is green, mine's red. The difference is my Pro 2 is not only red, the candlestick, but my stochastics are telling me it's a short. So I know, because the bond market, the gold keeps going up and the yields are going down, that I know this is not, when these banks came out, I said, something's wrong here. How come the 10-year treasury yields keep going down and gold keeps going up when everybody's celebrating these big banks? And when you look at their chart, you can see it. Everybody's going, like Mickey Mouse is going east on the westbound train. So we didn't get hurt. And if you also, another big one was Wells Fargo. Look at Wells Fargo if you look at your chart. Look at that day. My God. People went nuts buying Wells Fargo. Wells Fargo went from, on October 10th, went from $77.62. Man, that thing shot up. Okay, by October 15th, it was up at around 87. But we didn't buy it. And guess where it is today? It's already back down to 83. But we knew not to buy it because, again, the chart follows the money. And by understanding what the bond market's telling us is yields go down, and understanding what the gold market's telling us, taking off like crazy, that we knew these banks, all these earnings that were coming out, they weren't going to hold, and they didn't hold. Take a look, JP Morgan didn't hold that high. Look at JP Morgan, are you kidding me? It hit that big high of JP Morgan of $312.12. Today's at $297. $297. Are you nuts? Wells Fargo hit that high of 87.47, and today it's 83.92. Citi, all of them the same. They're all the same. So again, we have all this uncertainty going on, and that's what the bond market's sensing, and that's what the gold market is sensing. And and as I said, there was no coincidence that when we had that recent spike in gold, it was the same exact time the labor market news came out, and it was terrible. As I said, here we had employers adding 128,000 over 3 months. The next 3 months, they only added 35,000. When that report came out, boom, gold just took off. So again, we have tariffs, oil, we have AI uncertainties, but nobody wants to pay attention to any of them. They just think the stock market's going to keep going up forever. Forever. Look what they're doing. I never seen so many people jumping into gold, these FOMOs, fear of missing out, that group. We call them tourists. They're not retail investors, they're tourists. When Goldman Sachs came out and said they think they're upping their price to 4,900, Bank of America came out the same day and said they're upping their price to 5,000. What did I say that day? Take profits, because you're going to see gold. You're going to see your gold stocks going down. And sure enough, what happened? The gold stocks started to go down. They started to go down. So the minute and that was just day before yesterday or yesterday, it started to go down. And look at today. Look at, and I had my gang members. That was yesterday they came out, right? Well, it was yesterday they came out with that announcement.
Yeah.
And I said, all right, I said, matter of fact, I said, it's like a new restaurant. When you find a new restaurant nobody knows about, it's great service, they give you great food, great portions, give you a credit card at the end of your meal, you get it right back. You don't want anybody to know about that restaurant. The minute everybody starts knowing about that restaurant, everything goes to hell. You have to sit there for an hour to get your credit card back. You have to beg to get a drink. It's the same thing now that all these banks said gold's going to go higher. This is where you get ready to learn how to sell short. The opposite will happen, always does. Because see, what they're doing now is they're trying to what's going to happen is we're going to get one big pullback in this gold. Not bad. Maybe we get 5-7%, which will be nothing. And then what's going to happen is we're going to get one last surge, big surge. And all the big players, all the hedge funds, institutions, Goldman Sachs, all the big banks are going to make a ton of money for all their their union people, all their clients, the police, their clients are the fire department. They're going to make a fortune for them. So we're going to get a pullback, and we're going to get one big last rally, bam. And the same thing's going to happen with the stock market. We're going to get one big pullback, and then we get this one last rally, bam. And then what you do is you keep watching your bond yields, you keep watching the gold market, and you'll know exactly, hey, what's going on? Is this market going to collapse or not? Now, so again, look at our GLD. It came down today after the announcement yesterday. Our GDX came down. Matter of fact, it has a head and shoulders. Now, we're not worried about GDX. We have a lot of shares of GDX. We're big in GDX and GLD. We're not concerned because it's still green, and it's telling us that there's no, it's not a short yet. That's the beautiful thing about that chart. So gold, watch it, and watch your bond market. You'll never go wrong. Join my gang, philsgang.com.
877-600-4264. That's 877-600-4264. It's up to me to make my dreams.